Good afternoon, everyone. It's 3 here in West London on Friday, the 23rd of October. We're into the US trading day, 40 minutes, and as you can see, the advance is slightly ahead of the declines. The S&P up a couple of ticks. It was up, it opened up, I think, 10 or 15 ticks. The advice on the front page of VectorVest does not advocate buying stocks at this time. We are in a down-up situation. The underlying trend is up. We've got a confirmed up, but the short-term trend or the primary wave is down. It's not all doom and gloom, however, because I've got the VectorVest composite of the US. I've just blown it up to a 3-month chart, and I put on the DEW market timing system, which is the one that I primarily follow. Sometimes I'll get in a bit earlier, as at this time with the primary wave, but nevertheless, that's the DEW. And in terms of swing trades, I like to be well exposed by the time the DEW turns up. This is pulled back, folks, and it's pulled back in a flag-like pattern. And yesterday, the low went down and ran 1, 2, 3, 4, 5. It went down below the low of the last 5 days and then reversed. That's a very strong signal indeed, and a little bit of energy out of this market today, and we can go, I think, quite a bit higher. So I'm reasonably optimistic that all is good. I think just wait for VectorVest to print that it's safe to buy stocks at this time. You get very lucky when you just do what the darn thing tells us to do. Again, if I look at the S&P 500, again we can see exactly the same situation where it went down. Now, this pattern is the market went down, closed below the last at least 3 lows, and then it reversed and it closed above the last 3 closes, and that's what the old floor traders used to call a 3-bar outside reversal, a very strong reversal pattern. So I'm quite optimistic that we can go a little bit further here. If we do a fib extension here, it would print a target of 3625. Right, so let's see if we can get some energy, but as you can see on the front page of VectorVest, the color guard not coming to the party. The primary wave is down, so probably a good idea to wait for the primary wave to turn up, and the underlying trend is up. So again, we'll go back to that chart. That's the market timing graph. If I change that now and put on the primary wave, that's the primary wave, and you can see how beautifully it clipped the bottom here, and the primary wave turned down on that particular day. I think you'd be well advised to wait for the primary wave to turn up at least, and that means that the primary wave would be in the same direction as the DEW, the same direction as the confirmed call, although this candle reversal pattern is quite strong here. Based on that, I've actually taken a little short on the long on the S&P 500. I'm long from 34.31. It's a very small position, so that's what I've been doing here. If I look at the overall market itself, I had to get out of quite a few positions during the primary wave sell-off, so I got out of Zoom on a profit of both. I lost in Hortons. I got out of LVGO at entry, and I banked my money on Target. So I've got positions now running in NEO still, a position running in PINS, CNC, Tesla, AMD, Apple, and I've still got that long on the GDX. So I'm hoping that there's a lot of red in these so far today, that those can turn around. So let's see how it goes. Most of the stops, certainly NEO and PINS, CNC, AMD, Apple, and the GDX, those stops are all at entry already. So the only one where the stop is not at entry, which is not looking that great, is Tesla here. Okay, so if we look at the UK, we can see that we've got a very similar situation in the UK, and that primary wave is down, the underlying trend is up. The market had a good day yesterday, but too early to buy stocks. The viewers, and that's what I'm following. Plus 500 has decided to move my way. Took a little while. The big mover of the week was the GB Group, and the GB Group, let's chart both of those for just the sheer hell of it. The GB Group, there's plus, and it's finally moved out of this cup and handle pattern. That's quite optimistic. I bought into just here. See that outside day? I bought in just there. Had to sweat it out. You do an awful lot of sweating out in this business. And that's the GB Group. A very strong gap up here in earnings. Come off a little bit. It's probably going to come back a little bit here, but that's been quite good. There's JD Sports. We can't fault JD Sports a little bit more. You can see that it's come back to these levels over and over and over and over again. That's CCC moving up very strongly indeed out of that triangle. Looks good to me. And that's Games Workshop pushing up. I see the guy in the Investors Chronicle give it a big punt this week. When I spoke about Games Workshop when it was £13, I was laughed at. Now everybody's talking about it. So this to me look at the trend, incredibly strong here. As you can see, it came back to these last old tops, looking good to me. That's Sylvania Platinum. I'm holding it. I've held it for quite a long time now, and it's starting to get it's gone sideways here, starting to break up through that. That looks fine. Team 17 I bought during the week. Let's have a look at the trend in this. There's the trend on Team 17. If we look at earnings per share growth over the last year going up strongly, and I felt that it found support here, and I think that looks good to me. Tristel, well, it's hanging in there. Avon Rubber has pulled back. I think it'll find support in here quite quickly now, as you can see. We've done exceptionally well. I've done exceptionally well, and I don't want to give it back. Hilton Foods, we looked at it yesterday at the Oxford User Group, and what was pointed out to me is this incredible earnings per share growth and the share price. I think that this is certainly, for any medium to long term portfolio, is a quality hold. That's Halma. It's just a great stock. Look at that, just a great stock. And Lion Trust, well, it looked really good here. I think that it'll be accumulated around that £12 level. Looks fine to me. And of course the one that's causing me maybe more grief than anything else is Cranswick. That's the chart over the last 5 years, and that's resistance. This is now support. I'm hoping it's going to hold. If it doesn't hold, then it'll be got rid of. But I would be upset if I had to get rid of Cranswick. I think it's a quality stock. It's got a huge relative safety. So that's what I've been doing, folks. Too early to put any new positions. I'm pretty much fully invested in the UK market. Very happy with GB Group. And I'll be reporting on these in detail at our Q&A on Monday afternoon. In the US market, let's go back and see what's happening. Market's up 4 ticks. No change here. My advice is to sit and wait. Now, on gold, folks, gold has still not broken that 1938 level that I spoke about earlier in the week or last week, and my advice to you is to sit on your hands and do nothing until that happens. So it was up at 1915 a few minutes ago, and then it fell back with the stock market to 1904 the last time I saw it. So it's still stuck in that range, and it can still pull back, unfortunately, to run stops to 1825 before it reverses. So let's just wait for confirmation. Do nothing. Don't worry. I'll shout long and hard when it's time to buy into some gold stocks. At the moment, I've just got that one position on the GDX. It's still my view that we're going to see some form of nice strong move up into Christmas, but we've got to get through this darned American election first. The stimulus is still being fought over in the US, but the bond market today pretty much saying that it's going to happen. So the American bond market, that is. So they're still arguing about whose name is going to be put on it. There's going to be an awful lot of noise over the next couple of weeks. So look forward to seeing you on Monday afternoon, 1:30, where we'll discuss all of this in a great deal of detail, and I'll do my best to look at all the shares that you're interested in. Thanks very much indeed.